Hello guys, welcome again. Let's get into the training. Sorry for the short break. Let's just get back to it. Okay, so we talked about identifying break of structure. Everything that we're doing, we couple it to the institutional order flow. I've talked about coupling directional bias with time and price. You need to know when to look for some entries. They happen at particular times, like London key zone and the New York key zone. We have talked about stopwatch and BMS and RTO concept. We have talked about that. So what we are going to be talking about today is contraction and expansion concept. Okay, contraction and expansion, integrating order flow. This is going to be our topic for today. Okay, so with this topic, I'm just going to get straight to the chart and then we'll look at it from the chart. Okay, you more of examples. All right, so here is my chart here, Euro USD. Let's start from the weekly time frame. Remember that everything that we are doing is based on higher time frames. Institutional order flow comes from higher time frames. There's nothing that you want to, you will not want to base your bias from a smaller time frame. You will never get a hang of that. Okay. So you always start with a higher time frame. And then as you're going lower, you have your IOF in mind, which is the higher time frame. Okay. With that, you ease you the stress and it will help you a lot to identify your structure. Okay. So the topic today is contraction and expansion concept. Okay, let's place this. Let's make it a bit. All right. So we have construction and expansion integrating order flow. So what is contraction and expansion concept? Now, this is the simple thing here is you try to look for candles that have smaller bodies from higher time frame perspectives. Okay, you look at candles that are compressive, that they have small bodies from higher time frame, and then which is a contraction, and after that contraction, you'll be now expecting an expansion. All right, you'll be now expecting an expansion in the direction of the institutional order flow. Now, for example, suppose that from here, we see that price is dropping, right? We see that price is going down. Okay. Now, for example, you see this kind of a candle here. This is a contraction candle, right? This is a contraction candle. Now, where is this contraction candle happening? We had a push down from here. Price went up, gave a pullback, came down. We expect a pullback, right? So price went back up, it rebalanced this inefficiency, and then it printed a contraction candle. Now, after every contraction candle, take note of that. After every contraction, there's a possibility or there's a high probability of an expansion happening. Okay, before you see any long move, it starts with a contraction. All right, it starts with contraction. So once you see this contraction candle, you know that the direction of the institutional order flow is bearish, and this is where your sell side liquidity will be. You know that from this contraction, your expansion is going to be down. All right, your expansion is going to be down. All right. So now, for this moment, you see this contraction candle here, which it left a fair value gap up. You will know that this is just going to give you a manipulation to the upside and then pull back. That's what is called AMD. We are still going to talk on that. It's a topic on its own. But for now, I just want to bring your knowledge to the fact that when you see a contraction candle, knowing fully well your IOF, know the direction of the expansion. Okay, like for example, this is another one here. This is a contraction. Now you have to pay attention to small bodies. Okay, smaller bodies are key. All right, smaller bodies are key. You focus only on the body, you don't focus on the wicks. Okay, the wicks doesn't have anything to do here. All right, so now looking at this contraction candle, you can tell me that price took this low, then came back up, and then you rebalance this institutional order flow here, balance this CB. What happened? It had to drop, and it dropped. It didn't clear out the sell side liquidity. When it prints this institution, when it prints this contraction candle, where do you know look next? You know that price is heading down for sell side liquidity, right? So at that point, you know that the expansion is going to be heading down for the liquidity. You are not going to be having an expansion to the opposite side. All right. But now what happens is that price came down to a certain level, like let's say it's a level of resistance. And now you have a contraction candle. We even had two contraction candles here. What are you going to be expecting? Are you going to be expecting an expansion down? No. Why? Because we have an efficiency here. We have a zone here that has not been balanced. Okay. So you wait for a pullback before price drops. Now, why is this pullback happening? It is going to lure in retail traders, people that don't have the mindset of smart money traders. They are going to be buying here as they are buying a support level, and they are going to be targeting this or this high here. Why are they buying here? Because that is, they don't have the knowledge of institutional order flow. But you know that the market is bearish, but you know that price will not just be dropping drastically. It has to be going back up, rebalancing areas, and then dropping, going back, rebalancing, and then dropping. All right. So that is why when you see a support level like this, you don't want to be selling at this point. Instead, you can wait for price at a discount level. This is your range high and this is your range low. You wait for price at least above the 50% of your range and you engage your sales. All right. So here we even had another block and an inefficiency at the same time. All right. So when you know the direction of price, when you know where price is heading to, and you see a contraction candle on the way, you will know that the next step is going to be an expansion. Now, if you know that the next step is going to be an expansion, how do you engage price? How do you engage price? Now, look at this here. Price came right up here to this other block. Okay. Price came and touched this other block, dropped back down, and then gave us a contraction candle. What are you expecting now? Right? You see, what are you expecting at this point? An expansion to clear the sell side liquidity. Remember, like I always say, price books from internal liquidity to external liquidity. Internal liquidity to external liquidity. In this case, every lower low is an external liquidity. These are all external liquidities. Okay. What are the internal liquidities? We have CBs, we have other blocks. All right. Those are the internal liquidity. We expect the highs of this structure, bearish structure, to be respected. You see, I wrote here invalidation, right? I wrote here invalidation. So price came back up here and then it started selling. Where is price going to? Is seeking for external liquidity. It has come back for internal liquidity, which was a daily order block at this area. It has come for internal liquidity and is going back now for external range liquidity. Okay. That is how price books. That is how price books from internal range liquidity to external range liquidity. So when you see a contraction candle, expect an expansion in line with your institutional order flow. But this doesn't mean that as you see, whenever you see an expansion candle, you just start entering your trades. No, you still have to look for areas. You still have to look for your PDRs, premium and discount. See the liquidity zones that are there to be taken before you engage your trade. Okay, let me just remove drawings. Now, I want us to quickly look at something here, okay? Like an example, I haven't checked this before. Let's just hope that it will be very clear. Now, remember, let's say we saw this expansion here. Let's go to the daily time frame and see how we could have engaged price to come right down. Now, this is the week here. We have 1, 2, 3, 4, 5 days, 6. Okay, so this is the zone of the accumulation on the weekly time frame. Okay, so what happened is that on the daily time frame, inside that expansion, price gave us a bearish order block. So this is the point you are going to be entering your sell when price comes back to this order block. All right, now you see that price gave an expansion here. Will you be selling from here immediately? We even had a fair value gap here. You cannot just start selling from here because you have seen an expansion. This is another block here. Price gave a pullback up to it and then it sold off. Printed another inefficient, another contraction candle here, and then it sold off, right? So how would we have engaged this 3 days here, despite the fact that price did not come back for this CB here to fill? Let me just see whether we can go to 4 hour and I still identify that level. Okay. Let me open daily open. Okay. Let me just remove drawings. I'll mark it back. This is the particular These are the 3 days here. Yes, okay. These are the 3 days. This is here. This is where it opens. You can see that red line. All right, let me just put this. Now, this is the first day. It opens here, and then it closes here. This is the second day. It opens, trades down, and then the third day and the fourth day. So now we had our contraction. No, yeah. This is the contraction candle here. This is our contraction candle at this point. This is the contraction day. This right here. Okay. So that was our contraction. Price opened here, came down, went up, came back, and then closed at this point. So the next day it opened at this level. Now, when it opened, it trades down. What does this tell us? It shows us that price is not going again up, right? We are expecting market structure now because it's in line with the directional order flow. So how do you engage? Price has already shown you willingness that it wants to continue going down. So where do we engage now? You simply, we spot this institutional order flow here, right? I mean, this is called IOFED, right? That's your CB has been filled right there. That's where you engage. Okay, if you want to look for confirmations now on the smaller time frames, you have your confirmations and then you enter your trade. I don't know if I go to 15 minutes, I'm going to lose track of this particular zone. So, but this is how you engage. You enter your trade and then you continue going down. Now, why I'm doing this is to let you know that you can have a contraction candle like the one on the daily I just showed you. Okay, like for example, this one here. Now we had a contraction candle here. This is the 4-hour. It's same. It can happen on the daily time frame as well. So we had a contraction candle here. Price actually was expanding up, right? Price actually was to expand up. But how do you engage? You have to first of all look if there is still something behind that price will want to come down for before you buy, because you don't buy things when they are high. You buy at a discount zone, right? When you look at this other block, you see how price came back to it nicely and then it took off, right? That's how you engage price. You don't just, you will not just start buying because price has printed and a contraction candle for you, okay? You have to look behind and see possible areas that price might want to pull back to before the buying starts. Okay, so at this point now again, price went up to that daily order block and then it started selling. It sold for several days, came back up here, gave us a contraction candle. Where is this contraction candle happening? It is inside an area of a CB, right? Immediately after the close of this candle, if price takes the low of this candle, I am engaging. Okay, if price takes the low of this candle, I am engaging and my stops are going to be above the high of the contraction candle. And where's my take profit? Any sell side liquidity from here or right down at that point. Okay, that's how you engage price. That's how you engage price. Now, there are some confirmations. Once you see a contraction candle, this is another level here. Now, the next thing I'm going to be drawing your attention to is that you can have contraction days, right? It's not like just from a single candle. You can have a weekly contraction, and inside that weekly contraction, you have like 4 or 5 contraction days. That means you have smaller body candles, a contraction. Okay, like for example, what I'm showing you here, this is a series of contraction. Now, at this point, price did not come to feel this price never filled this BC, this CB here, okay? But immediately price took this low, the low of the contraction. What that tells you that price is not coming for the CB for the moment. Price is going to head down for any close sell side liquidity that might be drawing price. All right, everything has to be in context. Everything has to be in context. Now, price printed this contraction candle. Even me at this point, I was expecting price pull back up before it sells, right? But immediately price takes the low of the range, I am looking for an entry. Okay, I'm looking for a pullback to short. All right, now if you go down to smaller time frames, you are going to see another block from here, but just looking at it, you see this last candle here. This is going to be the open of that is going to be my other block, and then price open here, trades back to it, and then It sold off till it cleared the sell side liquidity. Now, this happens most of the time on areas that have a high, that is the drawn liquidity is very, very high. Okay. So price went back up here, came back down. Now, here we had a structure break. This is a BMS to the upside. This tells you that price might want to continue the uptrend, right? Now, what happens is that you have your order block laid down here. This is your order block right here waiting for you. This is a perfect confirmation. Price came down to it, printed a contraction candle, right? And then the next day it started pushing up. It even closed another contraction again. Where is the expansion going to happen? You know your IOF price is bullish, right? So your expansion is going to be in direction with your IOF. IOF, where the market is heading to, that should be the first thing in your mind, all right? The first thing in your mind. The first thing in your mind. Actually, here, price was still bullish. Like I said, when you're looking for contraction candles, you focus only on the body of the candle. You neglect the wicks of the candle, okay? You focus only on the bodies of the candle. You don't look at the wicks of the candle, okay? That's very, very important. You don't look at the wicks of the candle. You focus only on the bodies, okay? Now, like I said, smaller range bodies, smaller bodies with bodies of candles are key. Okay, you have to focus more on that smaller bodies. All right, you can see on the chart everywhere you had a contraction and expansion happens. All right, from the weekly time frame, everywhere there is a contraction, most of the time an expansion happens. We had a contraction here, expansion to the upside. We had another contraction here, expansion to the downside. Okay, contraction, expansion, contraction, expand to the upside, contraction here, expand to the upside. Most of the time, everywhere you see a contraction, okay, you have an expansion, contraction, expansion. All right, contraction, expansion, contraction, expansion to the upside. Okay, so all this you just have to look at your charts. Now look at this type of contraction. You had a contraction here and price even skipped, all right, with the volume gap, okay, volume imbalance. Okay, and then price went back to it printed another contraction and then it expands to the downside. Series of contraction weeks gave a pullback and it expands, right? Contraction, expansion, contraction, expansion. Now, this is the way to find massive moves before they even happen. Okay, this is a way to find massive moves before they even happen. All right. Now, for example, if I'm to tell you that, okay, here we are, if price is at this point, now this particular day, I tell you that, all right, this is what it is here. I have price has filled this CB. Price has filled this CB. Okay. Price has filled this CB right here. And it has printed for me a contraction candle. All right. That's my contraction. Contraction. Let's put it at the top center. Okay. That's my contraction. It's too small. Let me make it big. Let's put that 14. So that's my contraction. Where am I waiting for my expansion? Expansion to the downside to where? The sell side liquidity. Expansion. Right? Top right 14. That's okay. So this is where I'm expecting my expansion to the sell side liquidity. Sell side liquidity. All right, that's simply it. All right, now if I give you this signal that, all right, next week, we are going to be expecting price to drop down, give us our expansion to the downside. This, we are going to have a heavy move, okay? Even before people know about it. Price is going to expand down. Now you will notice that price opened and did not just start dropping. Price went back up. All right. This is to a premium array. This is to a PD array. There should be another block here on smaller time frames, and that's where you take your entry. Okay. You don't just, price doesn't just open and you start selling immediately. You wait for price to give you a pullback or a premium in the case of selling, or a discount price in the case of buying. You don't buy when prices are high. You buy at the discount. You don't sell at a discount. You sell at a premium. You don't sell when prices are cheap. Okay. So with that, price expands to the downside. Let's see what happens. Let me forward it a bit. Okay. You see the expansion now. Many people would have been looking at this other block to hold price for a long time, right? Maybe heading for the upside, but that's not really going to happen. Price created an inefficiency here, a CB, and it came back to it, and then it filled the BC, right? And then my target is external range liquidity. You see how that happens? Very, very smooth, very, very smooth. Okay. As simple as that. There is nothing here to worry your brain or whatsoever. All right. Now, this contraction happened here, and then we had a CB here that was created. So price came back to it, boom, another day points the sell side liquidity, and price will clear it off. Okay. Now, all this concept is summarized in the power of three. Okay, we call it the power of three: the open, close, the high, and the low of a candle. Now, most of the time you can use now this lesson I'm giving, like I said, is part of the AMD pattern. All right, it's part of the AMD pattern. Now in this case, you can use bars. All right, these bars, the type of charts called the bars. Right, it opens, it manipulates up, it expands. Right, contraction, expansion, and it closes. Contraction, expansion, and it closes. Right, that is it. All right, so with the lesson on the accumulation, manipulation, and distribution, we are going to talk more on the bar chart. Right, I'm just hinting you on that. Okay, so that is it, guys, for this lesson. Look for candles that begin to compress. Look for candles that begin to compress. Know your institutional order flow. What next to look out for? You look out for areas on smaller time frames to engage and in direction with your order flow. As simple as that. Nothing to worry about. Is that clear? All right. So to make the video short, I'm just going to cut it here, and I'll be expecting your questions so that we go live, and then we sort out your worries. All right. So keep on practicing, practice, practice again.